Welcome to our live presentation today for Monday, the 11th of July, 2022. Building your trading plan. My name's Grant Barnett on behalf of the team at FXTrading.com. A welcome to you. I hope you've had a great Monday. And if you are watching a future recording of this presentation at any other day and time, a warm welcome to you as well. All right, we've got lots to share with you today, so let's jump straight in. Before we do get underway, this today is just a coaching event only. Any market examples given throughout in presentation this evening or any information is just a coaching event only and should just be viewed as that. If you would like to look at our product disclosure statement, that is available for you over at fxtrading.com at any time this evening or whenever you wish. Okay, what we're going to be covering today with you is learning the basics of what really drives markets. Extremely important. We'll then move on to learning how to not to step in front of a bus before you start to trade. That'll make a little more sense for you as we talk about that this evening. Learning one technical strategy to add into your trading plan, learning to use the same risk parameters as the pros, learning how to keep your trading plan simple and understanding correlation in currency pairs. We'll also move on tonight to talk about how the four key principles of success built into your trading plan certainly can assist you. And I'm really excited to show you tonight our new FXT's new trading tools package, which will be introduced onto our MetaTrader 4 and MetaTrader 5 interface in the next few weeks. We're really excited to share that with you. I'm going to share quite a little bit of that tonight with you at the conclusion of talking about our trading tools. All right, let's jump straight in and learn the basics of what really drives markets. When many of our traders come to look at trading the markets, they're many often using and gravitating to technical charts only. It's really important, in my view, to really understand what really drives markets in a direction of fundamentals, and meaning things like interest rates, inflation data, employment data, resale, sales, trade balance numbers, GDP numbers, etc. Those are what we call fundamentals. And it's important that you understand what's really driving markets. And is it important for you to understand the micro details of those announcements and what they come out? No. But in my view, it's really important for you to know when they happen. So there's a number of ways that you can really give yourself a better understanding of these particular announcements. There's a website on the screen there which you can maybe take a note of, write it down if you'd like, called forexfactory.com/calendar. There's quite a number of others as well that are available for you to know when these fundamental announcements come out through any given trading week. And you can filter your time zone and the news impact. So for instance, on that forexfactory.com website, you can filter it down just to show you the major impacting news announcements, or you can look at all of them. But it's a really important understanding tool for you to understand to ensure you're not stepping in front of a bus. And what I mean by that is, if you're looking at a potential technical strategy that you've learned, whether that be an intraday type strategy or a swing type strategy where you might be holding a position for a number of days or weeks, it's important that you understand if there's any major news announcement that might likely impact that particular country's currency that you're looking to place a position on. Because if you've got an announcement out like an interest rate announcement, unemployment, it might be non-farm payroll, or some important impacting announcement on a major currency pair, you may place that position and suddenly that particular price might whipsaw around and take you out of that position if you've got no real understanding of why that happened. So get yourself up to date in relation to understanding those announcements, and have a look at a website similar to forexfactory.com. There's a number of others which are really helpful for you as well. So really, step number one in your trading plan is check the news. Check the news and make sure you're understanding when those major announcements are going to occur. Learning one technical strategy and master it. A lot of traders, when they come and look to trade the markets, whether it be the Forex market or the crypto market, whatever it might be, a lot of traders are overcomplicating things by looking at multiple technical strategies and trying to learn many of them all at once. My greatest advice to you here when it comes to learning a technical strategy is keep it simple. Keep it simple and learn one at a time, okay? If you can't master one, you won't master 3 or 4, okay? So really important to master one particular technical strategy, no matter what it is. If you're somebody that wants to trade an intraday style where you're placing multiple positions a day, or whether you're a swing type trader and maybe taking 1 or 2 trades a week or 3 or 4 trades a month, whatever it might be, is keep it simple and learn one at a time and master it. Okay, really master it, because I can honestly tell you, if you can't master one, you won't master 3 or 4. And one big tip I can tell you is, if you are looking at learning a particular trading strategy, I would strongly encourage you to learn the basics of chart patterns first, okay? Learn the basics of chart patterns first. So just basically basic chart patterns, whether you're looking at a candlestick chart, a line chart, or a bar chart, however you like to look at your charts, learn those first. And in fact, over on our website at fxtrading.com, if you click on the education tab right up at the top, there's some fantastic videos and tutorials of basic chart patterns, okay? And it's really important that you understand those basics before you move on to maybe something a little more technical. So here again, keep it simple, learn one technical strategy and master it, okay? I recommend that you choose, if you're new particularly to the currency market, choosing the majors, okay? The major currency pairs like the euro against the US dollar, the pound sterling against the US dollar Japanese yen, Aussie US dollar, and something like the US dollar Swiss francs, okay? These are the most liquid currency pairs in the world, the most consistent in relation to news and fundamentals and what happens when those announcements come out. And in my view, it's important for you to be trading a lot of those major currency pairs first, okay? And understanding the basics of correlations of these particular pairs. And what I mean by correlation is what actual currency pairs are correlating together when news announcements occur or there's a major move in the market. And later on tonight, I'm going to show you one of our great tools in our FX Trading Tools package, which is the correlation chart, that it shows you all the relevant enrichment correlations of pairs, to ensure, if you'd like to learn more about that, you can, in a simple snapshot of just picking up our FX Trading Tools package and clicking on our correlation tab, which I'm going to show you a little later on tonight. And also, what are the commodity-based pairs versus the safe havens, and really what trends together? For instance, a commodity-based pair is the Australian dollar. It's a major commodity-based currency. Things like that are really important. And you initially might think, if you're new to the markets, well, I don't want to complicate things too much. And that is correct. You want to keep things nice and simple. But understanding commodity-based currencies and safe haven-based currencies is really important. So your trading plan so far, firstly, number one, check the news, okay? Understand when those fundamental news announcements are coming out, and there's multiple websites you can look at to do that. And as I said, you can just save it in your bookmarks on your web browser. It might be forexfactory.com or something. And if you're looking to be a participant in the markets today or tomorrow, whenever it might be, open that up. Have a look at when those news announcements are coming out, to ensure you're not essentially stepping in front of a bus before you particularly place a trade. Number two, so far, our trading plan looks like we want to be learning at least one technical setup, okay? And as I said, keep it simple, learn one at a time. If you can't master one, you are not going to master 3 or 4 at a time. There's some great educational tutorials over on our website at fxtrading.com. Click on the education button up the top, and you can see multiple videos available for you there. And I would get you to gravitate to some of the chart patterns first, some of the basic chart patterns that you can learn, because they can be really powerful. Some of the most simplest and most profitable trading plans I've ever seen over the last 15 or 20 years can be written on the back of a napkin. Okay, and that can just be simple technical setups like learning chart patterns. All right, let's understand a little bit more about risk. Use the same risk parameters as the pro. This is not something a lot of traders take into account when they first come and trade, in particularly when they're looking at maybe a demo account first. But more importantly, when you go onto a real money account, your capital preservation of your account, or the funds in your account, is absolutely critical. Okay, so understanding, learning not how to blow up your account is absolutely critical. Capital preservation is absolutely king. Looking after those initial funds that you do place into that account, whether that be $200, $400, 500, 1,000, 10,000, whatever it might be. Now, a basic rule of thumb: keeping your risk to around 1% of your trading capital per position. Okay, there are a number of risk calculators because we are using a derivative product, and you do get access to some leverage in relation to your account and trading a derivative product with MetaTrader 4 or 5. But we also provide you here at fxtrading.com a trade manager tool, which are also releasing very, very shortly, that allow you to just quickly place in the percentage risk you'd like to have, place in the stop loss value you'd like to have, and it will give you your maximum volume that you can place as a maximum on your position. But really keeping it simple, keep your risk exposure to around 1% or less of your trading capital per position. And maybe look at having a maximum total risk exposure of around about maybe 2.5 or 3%. Okay, so what I'm meaning by that is, if you have placed one position in the market and you're risking 1% of your trading capital, then you potentially, if you want to have a risk exposure of 3%, you've maybe got another couple of trades that you can place at the same initial 1% risk before you maybe get to your total maximum risk exposure level. Some traders initially, when they come and look to trade the markets, and particularly when they're using a leverage product that is available to them, very naively, they're placing positions in the market and they've got risk exposure levels of 15, 20, 30, 40% of their account exposed into the market. That is not a professional way to trade. That is not how institutions and professional traders that make money in the markets long-term trade. They're keeping their risk exposure extremely tight to around 1% or less per position, and they will have a total risk exposure that they will have as a maximum. Okay, and that's just a round number, general advice that I'm giving you there to potentially consider. And of course, you can downsize your risk and still be holding maybe 4 or 5 or 6 positions in the market by simply downsizing your risk as you place further positions into the market. So really important, capital preservation on your account is absolutely king. So what I recommend you do is stop focusing on your win-loss ratios when you first start to come and trade the markets. Okay, a lot of people will come and look to get it right 80, 90, 95% of the time. That doesn't happen. Okay, that is very, very, very difficult. And if any traders out there that tells you that is possible, well, that would be a little bit of a stretch of the truth in my eyes. What I want you to do is focus your concentration on your trade management, on your risk and reward per trade. Okay, focus yourself on your risk and reward per trade, because profitable traders often write less than 50% of the time. And that is true, absolutely true. But they're not trading in what we call a one-to-one type manner. So if I go back and I talk about here the risk exposure you might be having, you might have a risk exposure of maybe 1% on position. Maybe you're looking to take profit at a 2%. Okay, so that is like a 1-to-2 risk and reward ratio. Okay, so don't concentrate on your win-loss ratios, concentrate on your risk and reward. And as I said here, profitable traders, many of them often write less than 50% of the time. And some people say, well, how can that possibly be? Well, if you're taking greater chunks off the market for profit than you're giving back for a loss, you don't have to be a professor and mathematician to work out that you can be right less than 50% of the time and still be a very profitable trader in the market. So in simple terms, if you want to be trading profitably long-term, in my view, try to be taking off for profit when you're taking profit far more than your original risk exposure was. Okay, so that will be trading in maybe a 1-to-2 or 1-to-3 type risk and reward manner. That's really, really important. So taking a little bit of a check back on our trading plan so far. Number one, check the news, understanding when the market announcements are coming out that are really driving currencies or whatever markets around the world, because I can tell you it is not the technicals. Okay, technicals do play a part in our trading. What really drives markets, in particularly currencies, is fundamental news announcements. Know when they're coming out. Do you need to know the micro details of those particular announcements? No, you don't. But just understanding when a major news announcement is coming out that is likely going to move a market is really important before you consider placing a position. Number two, master one technical setup. Really important. There's lots and lots of technical strategies out there and available for you. As I said earlier, keep it really simple. Learn some basic chart patterns first. It's incredible how some of these simplicities of chart patterns, you can bring them into your trading, in particular if you're new to the markets. Number three, keep your maximum risk exposure to around about 1% per trade, potentially looking at maybe a total risk exposure around 3% if you're in one trade or more than one. All right, a few questions coming into our chat box feature of the conference room. Please hold off any questions until we get to the conclusion of our presentation this evening. We've got lots to share with you, and we're just about very shortly going to bring you up our trading tools package, which you're going to really enjoy some of the features of that. So number four, I'm going to talk to you a little bit about repeatable execution. Trading, and particularly when you're trading the currency market, whether it be in intraday strategies or scalping the market or whatever you're doing in relation to your trading plan, whether it's multiple positions a day or maybe 2 or 3 positions a week or whatever it is, trading is essentially a numbers game, okay? When the trade is there, and I'm talking about your trade, you understand the fundamentals of what's driving the markets. You just understand those news announcements, okay? Your technical strategy presents itself, take the trade. Do not pick and choose, okay? You need to become a sniper and not a duck hunter. A sniper is someone who patiently waits for their position to come up and places the trade when all of the elements of their trading plan comes in place. A duck hunter who is somebody there who is just spraying at the market, buying and selling all day long because they think their trading strategy or their technical setup may be looking like it's presenting to them. I can give you a really big tip, guys, in relation to learning technical trading strategies. If you're learning one, and this is all about becoming a sniper, okay? If you're looking at 4 or 5 different currency pairs and you've got one technical strategy that you're learning and you think you can identify that straight away, you must be able to bring your charts up and within the first 4 or 5 seconds, automatically straight away identify your trade, okay? If you cannot do that, do not take the trade. Your trade strategy or setup is not there. Okay. One of the biggest things that a lot of traders new to the markets, they fall into a habit of, they'll bring up multiple different currency pairs, they'll look at multiple different time frames, and they're essentially trying to invent the trade. Okay. They're trying to make themselves believe that position is actually there. If your technical strategy setup does not present and you cannot identify that within 3 or 4 seconds of opening your charts up, whatever currency pair that is, or crypto or index or share CFD or whatever it is, the trade isn't there. But if it is there, take the trade. Don't pick and choose, be a sniper, be really, really particular in relation to your trade, and don't be a duck hunter. As I said, a duck hunter is somebody that just sprays across the markets, buying and selling willy-nilly. That's not how professional traders take positions in the market. So practice your plan on a demo account, okay? I'd encourage you to do this on a demo account first, a minimum of maybe 50 to 20 trades, okay? And it doesn't matter whether that be a more of an intraday style strategy or swing style strategy where you might be in the trade a number of days, and test your risk and reward. Test your risk versus your reward. So if you're risking 1% in the market, and let's say taking an example, you might be risking 50 pips and your reward might be 100 pips. Okay, that's a 1 to 2 risk and reward. Okay, test your risk and reward and your P&L. Your P&L is your profit and loss. Try to put the dollars in the back seat. Okay, this is a process. Professional trading is a process-driven exercise of what you're doing. And I know everybody is doing it for the dollars to make money. We certainly understand that. We're not naive enough to think that that's not what you're doing. You are. But this is a process, and you must understand the best way about that process is developing a trading plan that suits you and keeping it nice and simple, and focus on that process. Treat this like a business, okay? Treat it like a business, not a hobby. I don't know too many people that make money sustainably long-term in the markets that just treat it like a hobby. Okay, if you're going to do this professionally and you really want to be serious about it and make money, treat this like a business, not a hobby. Okay, so your trading plan, here it is. Number one, and by the way, this could be written down on the back of a napkin. Okay, check the news. Understanding when the fundamental news announcements are coming out. Forexfactory.com is a great website to look at. You can filter the news announcements, the impacting news, the red ones, and just showing what the major news announcements are. And you don't need to know the micro details. Okay, you just need to know the time that they're coming out. So you're not going to be placing a trade, for instance, on the US dollar, Japanese yen, for instance, and suddenly there's a Federal Open Market Committee, a major news announcements coming out of the US, or like an unemployment number, and suddenly you get whipsawed out of the trade and you wonder what on earth happened. Okay, just check the news, understanding when those big major impacting news announcements are coming out, and you can filter them to the major impacting news. All of those websites get you allowed to do that. Master a technical setup. Learn the basics, as I said, over on our website, fxtrading.com. Click on the education link, and that will provide you some great videos and just some basic chart patterns. Okay, a lot of the most simplest and most profitable trading plans I've seen are just from simple chart patterns that are available for you to learn. Keep your risk exposure to around 1% or less per trade. A total risk exposure maybe around 3%. That's a general advice number there. And when your trade presents, when numbers 2 and 3 here present themselves, take the trade. Don't pick and choose. The trade must show to you. You must see it straight away when you open your charts within 3 or 4 seconds. If it's not there, don't try to invent it. Be a sniper. And if it's there, take the trade. So in essence, we've got 4 key principles of success. And this is about keeping it simple. Number 1, understanding the fundamentals. Number 2, the technicals, and keep it simple by learning one technical chart strategy at a time. Understand your risk management, that capital preservation of your account is absolutely critical, and keep that in check. And number 4, it's all about repeatable execution. Okay? They are in essence the same 4 key principles of success of what some of the major institutions and banks around the world trade with. Okay, understanding fundamentals, some basic technicals, risk management, absolutely critical. And when the trade happens and it's there, it's about repeatable execution. Okay, it's as simple as that. All right. What we're going to be doing now, we've just nearly spent about 25 minutes talking about a trading plan there, and I hope you found that really valuable, in particularly if you're new to trading. It's really, really critical. But I'm going to talk a little bit now about a new FX trading tools package, which is an exciting time for us here at fxtrading.com. We've just launched a new trading tools package, which is going to be available on the MetaTrader 4 and MetaTrader 5 interface. And there's over 20 different trading tools that are available for you inside the trading tools package. And if you're opening a live account with us here at fxtrading.com, you're going to have access to what I'm going to be showing you tonight. And tonight I'm going to show you 4 or 5 of what I think is some really great tools that are available for you in here. We don't have time tonight to go over all of the 20 different trading tools that are available. I'm just going to show you a number here tonight. So our FXT Navigator, what is this? Well, it is essentially a full set of tools, which gives you, the trader, the opportunity to get historical statistics and analytics, as well as identifying some trading ideas with a statistical edge. So additionally, it does include some alerts and some signal generation. So really great for anyone that's new to the markets as well, of giving you an opportunity of giving you some potential signal opportunities. And it makes traders' experience easier and more enjoyable with up-to-date market data and lots of tools integrated within the MetaTrader 4 and 5 interface. So the FXT Navigator can be loaded onto any chart by simply dragging and dropping from the Expert Advisors folder. And what I'm going to do with you now, I'm going to share up my actual MetaTrader, and we're going to show you that right now. So this is a live look here at a MetaTrade, and you should see that all on the screen here. And if you just follow my cursor here, I want you to follow my cursor down into the Navigator window down here, and you can see where it says Navigator here. I've just highlighted. So as I said, the FXT Navigator can be loaded onto any chart by simply dragging and dropping it from the experts folder and inside the Navigator window. So we're going to go ahead and do that now onto a blank chart here. So let's go ahead and drag and drop that on. This is what you'll be doing. You're going to come and do some trading with us. And it's important for traders to really have a clear overview of the market performance across multiple time frames in one snapshot here. So you can see up on the left here, we've got 4 different boxes, says Market Watch, Screener, Alerts, and Signals. So if we click on the Market Watch button, let's go ahead and do that now. We've got 5 tabs to explore. Look at the top here, follow my cursor up the top. Performance, trend, oscillators, price journey, and correlation. So here's what the first tab, performance, offers. Okay, let's go back to the performance tab at the top here. It provides traders with a table with a watch list consisting of a set of instruments. You can see all the symbols here on the left-hand side, and this can be customized as well. It shows us the current price, and then the percentage prices changes in the different time frames. So we've got daily, weekly, monthly, year to date, 2021, which was the last previous year, the volatility, and also the drawdown from the highest price of all the available history. And this is available for you in one click of a button, okay, by simply clicking on performance. Now, moving averages, commonly referred to, as many of you may know, as MAs, are one of the oldest and most commonly used technical indicators. And they've become a staple part of many trading strategies because they're really simple to use. And in a few words, they really smooth out fluctuations to help you distinguish a trend. Okay, now, when we click in the FXT Market Watch Trend tab, which I'm going to do here for you now, we've got clicked on the Trend tab. It immediately displays the overall trend result for the symbols displayed on the left. Okay, and it's combining our FXT's default fast moving average, medium moving average, and slow moving average. And the trend result will be shown as either buy, strong buy, we've got down here, sell, or strong sell. You can see those listed under the word trend here for all the relevant different symbols. And if we click on a symbol's name, which I'm going to do here now, a new chart is going to pop up with what we call our FXT trend indicator that displays the 3 moving averages from the trend settings. Okay. Now, the slow moving average is painted with 4 different colors, and you can see this here. If you just follow my cursor, this is the slow moving average painted with 4 different colors. Okay, in order to help you identify the potential signal from the specific bar. Okay, now dark green is for stronger buy signal. So for down here, for instance, if you follow the dark green up here, potential buy signal here. Light green for a buy. You can see the light green in the moving average here as well. Orange for sell. If we move across to the top over here on the right-hand side. And red for strong sell, which is indicated by here. So in summary, if the price is higher than the fast MA, so if the price is higher than the fast moving average, and the medium moving average is higher than the slow moving average, which it is here, the purple one here is higher than the slow moving average, then it's indicating a strong buy, as indicating here. Okay. If price is lower than the fast MA, so if price is lower than the aqua moving average, and the medium moving average, the purple one, is lower than the slow moving average, which is our colored line here, our 4 painted colored line, then it's potentially a strong sell, as indicated here. Now, I just want to point out here, guys, the difference if you're familiar with currency trading here. The bottom here to the top, in relation to that potential strong buy here, all the way up the top here, is over 200 pips. 200 pips. If I take just these two examples here, if we take this one here from the top, where this is presented a strong sell, and pull this down to the bottom here, this is close to 300 pips. Now, if you're familiar with currency trading, a pip is the smallest incremental price movement of a currency pair or whatever you're trading on your MetaTrader platforms. Each pip can be worth anything to you from 10 cents a pip all the way through to many hundreds of dollars a pip. If you were just trading $1 a pip and you're entering at this strong buy here and you're taking it up to the top up here, that could have been potentially a $200 move if you're trading just $1 a pip. You're trading $10 a pip, that's over $2,000 move if you were trading that particular value. And the same thing can be said for a strong sell here in relation to whatever pip value you're trading. And there's multiple different ways you can look at when to enter and FX the market. And our FXT user guide gives you a full summary of the default settings and how this particular tool will help you understand better if a combination of our moving averages is helpful for a selected symbol that you're looking at, and if it can provide a useful information about when to enter or exit the market. But an incredibly powerful tool for you to use. And this is just one, in my view, one basic trading strategy that you could learn. You could have your fundamental check of the market, of understanding when the news announcements are coming out. That's not rocket science. You can do that very easily by looking at one of those websites. This could be your technical strategy that you might be implementing into your trading. Just when you have a strong buy signal or a strong sell signal, that's all you would have to learn, okay? And then you can have some risk parameters around your risk exposure, what you want to risk per position. And when your particular strong buy or sell comes around in the markets, you could be placing and executing that trade with a repeatable execution. All right, let's now have a little chat about one of our next tabs, what we call our oscillators tab. This is going back onto our FXT navigator here. And I'm going to click on the oscillator tab, one of our 5 tabs at the top. Okay, let's go and click on oscillators. Now, an oscillator is any object or data that moves back and forth between 2 points. Okay, in other words, it's an item that is going to always fall somewhere between point A and point B. Now, our FXT MarketWatch oscillator displays our oscillators valued in the preferred time frame that you want to look at. It could be 1 minute chart, 15 hourly chart, monthly chart, whatever it is. Okay, and it displays the oscillators values in your preferred time frame. And traders can change the settings. You can see over on the right hand side, if you follow my cursor, over here on the setting box on the right hand side. Now, when we're clicking our FXT MarketWatch oscillators tab, as we have, it's going to immediately display the overall trend result for the symbols displayed by combining our FXT default RSI and stochastic levels. Okay, now these are medium RSI or stochastic levels, and the result will be shown either neutral, overbought, or oversold. Okay, we're going to have a look at some charts here in a moment. Now, what we can do is click on any of the symbols on the left here. I've already prepared one here that we can take a look at on the Australian dollar, Japanese yen. So this will give you the 2 indicators as you've set them for live monitoring. And the RSI is shown in red. You can see down the bottom here in red, the RSI. And the stochastic is in green. You can see that very, very clearly. Now, in summary, when the RSI is higher than the 70 level, okay, when the RSI is higher than the 70 level, as indicated, say here, and a stochastic is higher than the A2 level, it can be viewed as overbought. And there's a great example of that if you're looking at my cursor here, right here, okay? Now, if we take a look up to the candlestick chart action, what's happening up here, just follow my cursor up. If I grab the crosshair tool here, if we were waiting for the overbought signal to occur here. This could be generated by maybe these parameters being met as overbought, the RSI and the stochastic outside of the parameters that are set, waiting for them to roll over as they have, and look at the price move from the time they've rolled over from about here all the way down another 200 pip move. This is on an hourly chart. And again, this could be another signal generation type tool that you could add in as a technical strategy. So if you have an overbought scenario, as we have here, you could just be waiting for potentially the RSI and the stochastic here and the RSI to roll over. Once they're both rolled over and confirmed, you could potentially maybe use that as a sell type opportunity. And as I said here, in this particular case, it's moved down around about 200 pips. And again, if you're trading $10 a pip, that might be a 2K move, whatever it might be in relation to your trading, whether you've got a smaller account size or a larger account size, you can be using this tool the same way. Now, what about an oversold type strategy? An oversold, we've seen an overbought one here and the opportunity there. What about an oversold? If the RSI is essentially lower than the 30 level, okay? We'll use an example down here. The RSI is lower than the 30 level, and the stochastic is lower than the 20 level. So essentially, if the red line here is lower than these dotted lines here, and the lime green line is lower than these dotted lines here, we're outside the parameters and we're looking like we're oversold. So once those turn up, you could potentially look at generating maybe a potential buy signal. And again, look at the opportunity here when that has occurred. Even if you're taking around this level here, again, that's about a 232 pip move. So again, you could potentially use this particular opportunity, the oscillators, as maybe another basic, just general technical strategy you could add into your trading plan, okay? And a neutral summary, which we saw back on the actual Market Watch tab there when we're on the oscillators, is when one or both of the oscillators don't meet the overbought or sold criteria. So a good example of that would be right in here, where in between the orange and lime lines, in between, if we've got any of the price action through here, that would be a neutral area which you would just leave potentially alone. And again, our user guide gives you a full summary of all the default settings of how you can use this tool to help you better understand if the combination of these oscillators is helpful for a selector's symbol, and if it can be helpful for you to enter or exit the market. Now, you might think, can you put alerts on this type of thing? Is this something that I can put alert on inside of my trading platform that each time this occurs, can it alert me? Do I have to keep looking at my charts? Yes, you can. And there's lots of noise in the market every single day, and new and seasoned traders alike may need some filtering the data points that are relevant to them. And this is where our FXT alerts is helpful to implement a personalized notification framework to help traders responsibly manage their positions and stay aware of the changes that might affect you. So you can set some alerts here for both the trend and oscillator alerts. So we're just looking at the oscillators there. You can set some alerts here by clicking on whatever currency pair. I think you can select up to 10 particular pairs in here, whether it be currencies, cryptos, stock indices, share CFDs, or whatever it might be. You can do the same thing on the trend tab as well. You can see there's a number of alerts already created here that you can set up. And once you've set up a push notification, it'll be displayed on your MetaTrader interface should your alert be triggered. So if you've got one set up here, for instance, the Aussie dollar against the US dollar, might be US Canadian dollar, whatever it might be, in your alerts, it will immediately alert you in your navigator interface when you open up your trading platform. And the alerts also can be set up as an email notification if you have set that up when you fill in your email properties on the FX platform. So at the alerts tab, which I'm going to click on right now, you can see here we've got a number of alerts set up inside of here, okay? And if you don't want to follow a specific alert anymore, you can easily delete it by just clicking on the cross of the delete button. So you can see some alerts set up in here, and as I said, if we have a strong buy or a strong sell, whatever it might be, on whatever symbol you've set up and you made your alert. It will alert you when you open your interface straight away. You can also set up some price alerts as well. Okay, this is really helpful. And you only need to fill in the price detail, which I won't go in detail now. I've already set up a couple of here. And this will actually alert you if the price has been triggered exactly the same way. It'll simply, as soon as you open your MetaTrader 4 or 5 interface, if you have got the Trade Navigator set up, it will alert you straight away. And an FXT Navigator user, guys, gives you a full summary of an explanation of how you can use the alerts. And as I said, this is an amazing feature in our Trade Navigator. You don't have to open it up and take a look at the trend or oscillators and be clicking on each of those all the time to make sure that you're keeping up to date with it all every hour or 4 hour, whatever time frame. You can just set up your alerts inside of here, whether it be active alerts on the trend or the oscillators or whatever it might be, and it will trigger for you. I want to show you now a really cool feature within the Navigator as well, called the correlation button. I mentioned earlier tonight about understanding what pairs correlate together. Okay, I want you to look very, very closely on the left-hand side here. You'll start at the top here. This is just showing me really the first 20 symbols on my watch list at a selected time frame. But you can see here the Aussie Japanese yen all the way down here, right down to the bottom. And you can see the same pairs are running across the top here as well. Okay. Now, what this particular correlation tab is doing, by default, it shows the first 20 symbols on your watch list. And if you want to click on the specific categories in order to filter out these results, you can. Okay, so if you're somebody who likes to look at cryptos or just stock indices or whatever it might be, you can click on the settings feature on the right-hand side and personalize that settings for you to ensure you can understand the correlation. But let's jump in and understand a little bit deeper about what we're looking at here, okay? Now, we can easily spot when there's a high correlation between two assets from the color, okay? So let's take a look here at, let's go down one on the left-hand side, the Aussie dollar, okay? And we can follow this across and we can see here, it says 87. And this is against the New Zealand dollar, okay? Now, dark green is a positive correlation, okay? A positive correlation is shown here. And the red is for a negative correlation, okay? So if I all the way across on here, I'll see the most correlated pair here in red. And you can have a look at this very clearly on all the relevant different currencies. If we take a look at the New Zealand dollar, Japanese yen here, the most positive correlation here is against the Australian dollar, Japanese yen. You can see that up top there. If we have a look at the GBP USD, the most negative correlation is against the US Canadian dollar. And we can do this in one simple snapshot, okay? A really powerful tool to use to understand what pairs and are correlating closest together, okay? And that's really critical because the last thing you want to be doing is placing maybe 2 or 3 trades on two or three particular currency pairs that are all correlating the same way. Because if one's going to stop out, then they're more than likely all going to stop out, right? If one's going to take profit, yes, mostly likely all are going to probably head in the same direction. But risk exposure is really critical, and understanding what particular pairs correlate best together is also really important in your trading plan. And this is a really simple tool to use. And as I said, our user navigator, guys, gives you a full summary of how you can use this tool to better understand if the correlation is helpful for you for a selected symbol, and if it can provide useful information about maybe when to enter or exit the market. All right, our last one tonight before we head off is what we call our screener feature. This is the one here. If we look on the left-hand side underneath Market Watch, it says screener. And you can see here, if I click on up here, there's a number of different screener features. Now, I'm not going to jump in and look at this tonight because we're losing a little bit of time here, but this is another fantastic tool for practicing manual trading and understanding historical data. So traders can simulate their rules to test how well they would have fared under a particular historical condition, and to check how well their favored indicators perform under certain criteria and how that would have guided them. So our FX screener helps traders to pick up studies within a tool such as moving average crosses, different streaks up and down in the market, percentage changes, if you like looking at Bollinger Bands or RSAs, and it really checks the historical results. And it's a fantastic tool for you to be able to use. And as I said, it's available for you through the MetaTrader 4 and MetaTrader 5 interface. And as we move forward with different webinars in the future, we're going to be showing you different other features of a Navigator trading tool, because as I said, I've only shown you 4 or 5 tonight, but I can tell you there are over 20 different trading tools that are available for you to have a look at inside our FXT Navigator. All right, gang, what I'm going to do is jump back to our presentation here. And if you have a question on anything that we've covered tonight, over in the chat feature of our conference room, you're welcome to type any of that information inside of there. I'm going to give you an opportunity now to also take a look at a number of links which we've set up inside of here, which you can get some access to. And these are some of the links that are available for you to get access to our FXT Navigator. It is available for you. So I'm just going to reference a number of these for you now. So if you're looking, whether you're looking to open a live account with us, whether you're looking to open a free trial, you are more than welcome to click on any of these particular links that I'm referencing, or you can see them very clearly over on our website at fxtrading.com as well. So you have an opportunity to open a live account. You get full access to our FXT Navigator coming off of MetaTrader 4 and 5 interfaces. And if you're looking just to open a demo account, you can do that. And of course, we can access you onto a live account quite simply through your client portal access also. So those links would have been registered for you to have a click on. Open the live account is the best one for you to be funding that and getting access to that Navigator in the coming days and weeks ahead, to give you an opportunity to become a far more smarter, in my view, and potentially more profitable trader long term. All right, guys, thank you so much for your company tonight. It's been great to have you with us. I hope you've learned a lot, in particular how to build a trading plan, a very basic, simple trading plan, and also the FXT Navigator and Trade Manager, which we're introducing, which is a really exciting time for us at fxtrading.com. If you have any questions, as I said, I know, thank you to Vicky for answering some of those as we've gone along tonight. That's been fantastic. Rowan's asked how to decide on risk mitigation, when to use the stop loss and when to hedge. Rowan, I'm not sure, familiar with your experience in relation to trading, but there's a number of risk calculators that are available to you if you're trading a derivative market, in other words, using MetaTrader 4 or 5. They might be external type apps you can use on your phone. But I can assure you, in the next few days and weeks coming up, we've got a trade manager, which is going to be available as a feature within our MetaTrader 4 and 5, which you can simply drag and drop onto a chart on our MetaTrader 4 or 5 interface. And you can very easily place in the percentage risk you want to have. You will need a stop loss figure or number that you can pop in, and it will give you the maximum volume that you should be trading to ensure that you're sticking within the percentage risk parameters that you want to set. Okay, and that's absolutely critical if you're trading the derivative market with leverage. You're welcome, Arman. A-R-M-A-N. I'm sure I may have pronounced that incorrectly, but I appreciate the nice comment there. Thank you very much. Yeah, so Rowan, in the coming days and weeks ahead, that'll be available for all of our clients as well, not just the FXT Navigator you've seen tonight, but also the FXT Manager, which will allow you to manage your exposure to as little as 0.5% of your trading capital, and it will spit out to you the maximum volume you should be trading based on the risk percentage you want to have and the stop loss number that you want to pop in. An absolutely brilliant tool that can be just accessed straight away inside the platform. All right, everyone, thanks so much for your company. If you're with live with me tonight, I really appreciate your time. If you have watching a future recording of this, we look forward to doing some trading and investing with you very soon. Thank you, Deepak, for your kind word, and Araju as well. If you have any questions, please pick up the phone or drop our team an email. You can use the live chat feature over on our website as well. If you have a question or two on anything that's been covered tonight, please send that through to the team. And you can, live chat feature is a great one to use, as that will come to us and we can respond to you as quickly as we can. But lots of exciting features coming up in the next days and weeks here at fxtrading.com. And we'd love you to come and do some investing and trading with us soon. Thanks, everyone. Have a wonderful evening, and we'll talk to you soon. Bye-bye.